Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Bitcoin's rebound from 91,000 to 102,400 initially suggested that the yellow horizontal support line would hold. However, after briefly touching 102,400, Bitcoin faced a swift rejection, retracing back to 98,000. This move signals that while buyers attempted to push higher, the market lacked the momentum to sustain those levels. On my charts, the red horizontal line at 98,600 played a crucial role today, acting as temporary support. The price bounced to 100,800 before facing renewed selling pressure, and now we are once again testing 98,000. Structurally, this confirms a short-term range where Bitcoin struggles to regain control above the psychological 100,000 level. Until macroeconomic catalysts provide a stronger bullish narrative, we may see prolonged consolidation below this key threshold. Lower time frames, particularly the 1-hour and 4-hour charts, paint a bearish picture with weakening momentum and increasing sell pressure. However, zooming out to the daily chart, we see a potential trend reversal in formation. If the wave trend indicator confirms with a green dot, it could signal the start of another bullish impulse. But without that confirmation, any short-term rally remains at risk of fading. Yesterday's ETF flows add another layer of complexity to the current price action. We saw outflows of $234.4 million, with BlackRock remaining neutral, while Fidelity led the selling with $177.6 million in redemptions. Interestingly, Grayscale stepped in with an $8 million buy, signaling some institutional demand despite the broader weakness. This divergence suggests that while some funds are reducing exposure, others are accumulating during this phase of uncertainty. When comparing this cycle to past bull markets, historical data remains on track. During eras 2 and 3, Bitcoin topped out around 300 days post-breakout, with an average of 506 days to reach an all-time high. Currently, we are on day 261, meaning there is still substantial time left in the cycle. If history rhymes, we could see a major move later in the year. Today's brief rally was fueled by macroeconomic developments, including the resolution of certain trade tariffs and ongoing discussions around regulatory frameworks like the Crypto Czar initiative. While these headlines provided short-term bullish sentiment, the market ultimately rejected higher levels, bringing us back into consolidation. Without stronger catalysts, we may remain range-bound for now. I'll continue monitoring the charts and keeping you updated as new developments unfold. Join the free Discord for real-time market insights, trade entries, and strategy discussions. If you found value in this analysis, drop a like. It really helps the channel. Subscribe and hit the bell so you don't miss the next update. And see you in the next one.